Hello, ladies and gentlemen. Welcome to a very special edition of Finance Junkies. We've got a special guest coming on today. Her name is Cathie Wood. She just bought 4 million shares of Palantir, and we've got her live on the show today. We're going to ask her, Chris, what's going on? Your girl's back in? Yo, there are 258 people here in 20.
Yeah, that's what I'm saying. There's already 50 likes. Like,
yo, didn't we say Cathie would be buying? Didn't we say that?
You did say it. We talked about this yesterday. Holy guacamole. I did not see 258 people. Oh, wow. That's amazing.
Oh, yeah. And
I guess whatever guest we have backstage knows how to bring a big audience. Let's just say that.
You know what I'm saying? Like,
okay, we're gonna get right into it. So everybody who's here, thank you all for being here. If this is your first time on the Finance Junkies, thank you all for being here. We have a very special guest today. It is not Cathie Wood, but definitely we will be talking about her tonight. The guest that we have, just to give him a little bit of an introduction, I think we would call, and Carlos, I've seen you call him a YouTube finance legend.
Yeah, the OG.
He's an OG. He's a pioneer of the space. I mean, back in 2016, when, for a community to exist, for a platform to have any relevance over types of content, there have to be pioneers of that content on the platform. So like TikTok does not become the dancing app that it is if Charlie and Addison Rae are not dancing. And YouTube does not become a finance behemoth in the media space if you don't have Meet Kevin, if you don't have Jeremy, and really those two, because Graham and Andre are great, but Meet Kevin and Jeremy like actually talk about individual stocks, right? So they really build an audience around those companies that they analyze. So Jeremy's been doing this since I think 2015, 2016, thousands and thousands of video posted, has proliferated the platform and has really built a really strong audience. And he's still relevant today after 7-8 years of doing this, which is really hard to do as a YouTuber.
And also enabled clowns like us to have a channel.
And he's enabled clowns like us to have a channel. And last thing I'll say on this, I had a call with Dave Lee once, and Dave Lee was telling me how the YouTube algorithm works. And he says, look, Amit, to be honest, the only reason you're getting any clicks is because I'm on YouTube. And he wasn't saying it in a negative way. He was saying, where do you think your content's getting recommended against? It's getting recommended against my Tesla videos. People care about me, so they might care about you, right? And people care about Dave Lee because they might care about Elon. So his video, right? So it's a cycle of how videos get recommended against each other. So I think it's safe to say we would not be here today. I would not be here today unless Jeremy pioneered the space. He was also nice enough to let me into his house when I went to Las Vegas back in September. So really, really awesome person, cool guy. Here we go, ladies and gentlemen. 383 people. The reason you are here, we got to do the bell for 300.
Right when he walks in.
Got 300 in a row. When we get to 400, we'll do the 400 bell.
Chris's face was priceless.
Jeremy, thank you for being here.
Hey, Jeremy, maybe you can convince this idiot to give up that stupid cowbell, man.
And you gotta switch Chris and Jeremy too.
Oh, I gotta switch Chris and Jeremy.
Yeah. There you go.
Whatever keeps folks entertained, as we say. So hey, it's the cowbell. It's the cowbell.
What's up, Jeremy? It's nice to meet you, man.
Absolutely. Thanks for having me, guys. Looking forward to this. My gosh, I feel like it's such a busy time. There's so much going on, and specifically, obviously, with you guys and with Palantir. I mean, what a time to come on the program for a time period like this. I mean, you have breaking news. You obviously got the earnings. I'm like, oh my gosh, man. So I'm looking forward to getting into a whole bunch of stuff. I appreciate you guys having me tonight. So.
Yeah, thank you for taking time out of your busy schedule to come here. So I want to start off with this before we get into individual stocks and stuff. We'll talk about Tesla and Palantir, obviously the main discussion. Real quick, legend on YouTube finance. Why are you still doing YouTube? Why do you enjoy YouTube? And any advice for people trying to build a YouTube channel in the stock space? If we get to a bull market, there's going to be a lot of people trying to do this. So why are you still doing YouTube, and why do you enjoy talking about stocks?
Yeah, it's always fun. That's the main thing. I think I'm still having fun with it. All these years later, it's still a really enjoyable process for me, And I certainly last year I felt really needed out there, specifically with obviously the bear market we experienced. A lot of investors obviously got absolutely tore up last year, and so that made me feel more needed, I guess you could say, in that sort of market. And I've probably been the most motivated I've been on YouTube for really like this past year. And I don't know how long that's going to last for. Eventually it'll fade out. But for the last year, I've been super motivated. It's been an exciting time to really be on the platform and whatnot. And when you build a pretty good sized audience, also you feel like there's a lot of people that want to know your perspectives, opinions, what you're up to in the market. And by not doing that, you kind of feel like you're letting folks down. Obviously, it's like there's a certain amount of people that want to hear my opinions on whatever happened and those sorts of things. And to say I'm not going to do that anymore is definitely a tough thing. So I'm still having fun with it. And as long as I'm still having a good time, I expect to be on this platform. And if it's ever a chore and I'm like, oh gosh, I got to record a YouTube video, if it's ever like that, then I'll probably leave. And it got close to that point at the beginning of 2021. I definitely felt like that. We were in that ultra bullish market and just like, it was just so hypey. And I started to feel like kind of like down about the YouTube space and whatnot. And actually, I think last year was the best thing that could have ever happened. So we had a purge, and I think that purge was healthy. And now we're here, and we're getting more into normalized time periods where you have certain stocks that are going up a lot, certain stocks that are going down a lot. And we're getting into a more of a normalish market, which is nice because we had anything but a normal market there for quite some time. So,
yeah.
Oh, okay, awesome. Chris, go ahead. You want to say something?
Yeah, I think you hit the nail on the head. I think there's so many opportunities that are presenting themselves like now. There's so much fear and pessimism out in the market, and things that literally 6 months ago or a year ago people were willing to overpay for, no one is willing to touch right now. And I think this is the time where if you are very selective about what you're picking, you do the finance, you do the research, you understand some core concepts on investing, you could really clean up house and then set yourself up for 10 years worth of not just chilling, because I think a lot of people think investing is you have to constantly move in of the market, out of it, in and out. And it's not like that. It's just finding the right thing at the right time, buying it and just holding it and just chilling for the next 10 years and just watching the money just kind of compound itself. And so I've been one of your bigger followers. Like, I think I might have been like maybe when you were 20 or 30,000 in the sub count. So I've been following you since those days. I was like, oh, you know what? And I'll be honest, at first I was just like, this guy is kind of an idiot. Like, I used to think that, but I understood the shtick behind it, where it was like you were trying to make this a fun thing, where I think if you just came off as a serious person, like, I think Apple is a good company to invest in, it would have been just so fucking retarded and people would not have even tried to invest. So I think that's
we need the holy smokers. We need the excitement.
Yeah, it has to be funny. At the end of the day, we're entertainers.
Yeah.
Mm-hmm.
And I think that's a key difference between us and CNBC, right? Where we try to break it down in more
there's other
simplistic
differences
ways.
between
We have better track record than Kramer.
but
Okay, so Jeremy, so Chris has been a fan of you for a while. He's talking about, buy companies right now, hold them for years, especially when there's a purge going on. I want to get into one of the biggest companies in the world, one of the most exciting companies in the world, Tesla. What are your current high-level thoughts on the state of this company right now? Obviously, you've been in it since about 2018. Our fellow co-host, Vitaly and Carlos, have constantly reminded us that they have 20x their money on Tesla, just like you.
But before he answers that,
Depends on
because
the
I had a question for him. I actually followed you on your channel, and when you sold out of Tesla, I'm like, this mofo selling out of Tesla? What's he, crazy?
you're
And I'm
leaving
like,
us.
God damn it! Why didn't I follow this mofo into selling out of Tesla? Because that's
It
actually
was
a
my
problem.
Tesla too.
Maybe you can help us with this, because like at some point we all have to sell. That's the point, right?
Yeah.
How did you know it was the time to sell, and how do you know it's the time to buy? Like, that's an important question, I think.
Oh gosh,
Everyone
yeah,
has.
that's a phenomenal question. So in regards to Tesla, I definitely cashed out much of my shares. That was kind of like, oh gosh, I'm thinking like late 2020, early 2021.
So that was
just
$1 billion market cap?
Yeah, it was just a valuation
T?
play at that time. And it seemed like, Tesla's valuation just got pushed too far. And it was kind of like, Tesla's going to have to make up for this for years. It's no different than, if Palantir was trading at $40 today, I might have a very different opinion than if Palantir is trading at $9 or $10, right? And so it's like, what are you willing to pay for something? And, the more you understand about Elon Musk's grand vision and kind of everything he's been trying to do, like at some point in time, you knew, or at least I suspected, that margins were going to have to be compressed, because if rates are going to go up, it's going to get to be a much tougher environment for home sales, car sales, furniture sales, anything that people buy on debt, right? And you take out a loan, and that would fit Tesla. And so, Elon's just one of those guys that he has that almost like a Jeff Bezos approach in a certain way of like, if I got to squeeze my competitors and sacrifice margin, I'm going to do that. And obviously that's a decision he's made. And ultimately it's hurting Tesla's margins and profitability in the short term. It should be for long-term gain. And we can get into all that. But that was kind of my thought process around that. And so I'm in a very different place now, because now I actually believe Tesla's a great opportunity in the market. So what a shift in a matter of 2 years. And that's the beauty with the stock market. It's like, a year or two can go by. You can go from this stock's crap, this is overvalued. I remember, to give you, I don't want to get too far off subject, but I did a video in the summer of 2018 talking about why Netflix and Amazon were massively overvalued. And like, I thought those stocks were going to do bad. Okay. And today, Amazon and Netflix are around the same price as when I did that video in the summer of 2018 now at this point in time. And the companies have done great. I mean, you look at their revenues over time and things like that. It's just the valuations got pushed too much. Now, Amazon's the #1 mega cap stock I'm buying right now. And so that's the beauty with the market. It's like one time, things are overvalued, and another time you're not. And sometimes you're going to get it wrong. And I certainly got it wrong in the past on paying too much for stocks. You're not always going to be perfect in this game. You got to be willing to accept sometimes you're going to overpay, or you're not going to cash when maybe you had an opportunity to. So, it is what
you
it
had
is.
a lot of hate actually for your Tesla call, by the way. I remember seeing all these the hateful comments. I'm getting some of them now, so I understand you a little bit better.
Yeah.
So
What hate are you getting? Hate for what?
just hateful comments, man.
Hateful comments. I was like, you didn't sell out everything. Okay, go ahead.
No, not selling out. But when he sold Tesla, there's a lot of Tesla bulls that come out immediately and start. So the question to you though is, when you sold, you obviously sold for a reason, but is it the best thing to do for most people? Because I don't know, are you actually up or down in that position? Because now you're coming back into Tesla. Overall, has the trade been beneficial, or is it better just to honestly just stick around and just dollar cost average because if you think it's going up higher?
So that's where things get complicated, because a lot of that money I put into small cap stocks, which also went down a ton. Yeah. So I should have just probably put it into cash at that particular time. So, and some of those small caps have started to come back recently, but a lot of them are still down significantly. So I can't say like, oh, I made out great on that. That was such a smart move, because at the end of the day, like I went down on a lot of other stocks as well, right? And so, I mean, for the most part, it makes sense to just hold through. Okay. And if you really are a believer in the company for the long term, it makes sense to just hold through. That end of 2020 into beginning of 2021 market was a different sort of beast. That was the closest thing we've had to our day of a tech bubble, I guess you can say. This was this generation's tech bubble we went through, in my opinion, right? And so everybody that didn't go through the first one, like we went through this one. And I mean, there was a moment it was kind of toward the end of 2020. I was actually considering selling my whole portfolio, which I that would have been a pretty dramatic thing, but I considered it. I didn't do it. I probably should have done it, to be quite frank, but I actually considered it. So that was a different market. And I don't think we should always think about the market in regards to these kind of freakish once every 20 year. We're going to have another crazy bubble market someday where everything's going to the moon. It's probably going to be a decade, 2 decades, 3 decades from now, but it will happen again. So most times, hold through. You love a company for the long term, hold it. It's going to fluctuate. It's going to be a roller coaster ride. If it dips big, buy some more shares and throw it in the filing cabinet.
I think the hardest part is sitting. I'm sorry. Go ahead, Carlos. Yeah.
Just to follow up on Tesla, how much of like your current conviction in the stock is what it's doing now and what they're reporting now, and how much they're talking about cars and margins, and how much do you factor in the Elon factor with respect to like bots, robo-taxis, like all the stuff that someone like Cathie Wood is just banging the drum on? Because a few years ago, she was talking about Tesla at 7,000 a share. If you do the splits, if you go back and look at what the actual stock price is, it's 15x what it is now, what we were buying it in 2019. She wasn't wrong. So my question is that like, are we in another situation like that where it sounds absolutely crazy that there will be, robots and robo-taxis in a few years, or how do you see that playing out?
Yeah. On top of that, Jeremy, I want to throw in the margins and them cutting and what you think about them having to reduce their margins. So robo-taxis, margins, can you speak to kind of all of that with Tesla?
Yeah. So first touching on the whole views of I call these like call options on it. Robo-taxi opportunity, robots, AI, everything Tesla's working on there. I just view those as like call options. So I don't personally put any major faith into those. I hope they work out. Yeah. And I think it's a little different than when
Amen, brother.
Yeah. I think it's a little different than when Cathie was making calls 5 or 6 years ago. So she was really talking about products that were already in the market, Model 3 and what they could ramp to, and vehicles and things like that, where a lot of these other things are kind of like, we're not there yet. We're not even to the robo-taxi in terms of like actually seeing these on the road in a major way.
FSD 12 needs to come out.
Yeah. So we could eventually get there, but we're not there yet. So that's kind of my views on a longer term. And I'm really looking at it from the company profitability. I'm really thinking where my mindset's really excited about is services, to be quite frank. The premium connectivity, Tesla auto insurance over time, the supercharger network. Just having more vehicles is going to mean a lot more things break on cars and go wrong, and there's going to be opportunities there. Software upgrades to self-driving or paying $199 a month for FSD and all these things. So my mindset's really going to like that Apple opportunity of like the services business. Plus, obviously, the exponential Tesla getting to 5 million cars, 10 million cars a year, which I believe they're still going to do over this decade. Now, in terms of margins short term, obviously Elon's keeping the pedal to the metal when it comes to that. He wants to take massive market share now. It's clear to me. And he's no longer interested in, we have this certain market share of EVs. He wants massive market share of total vehicles sold. And I think he's on the right track there. And just in real life, like I'm starting to see Teslas in areas that I wasn't seeing Teslas previously around Vegas, where it used to be like you're only in the wealthiest areas. That's the only place you saw Teslas. And now I'm starting to see them very diverse. And so I think that's something that's going to keep playing out, and more middle-class folks are going to consider a Tesla when they go to buy a vehicle, not just because they want to go on the EV wave, but because that's my best option is a Model Y or a Model 3 if that's their situation. So
are you seeing
Cybertruck's a whole next?
That's another. Are you seeing any
Real
growth?
quick before Carlos, you asked it. Let me just do a quick super chat. $50. Thank you for tea. Great pod, guys. You guys are helping guide me through Palantir. Jeremy helped guide me through my early Tesla years production hell and help me stay confident in my convictions. And Tesla eventually turns into my first $100,000 position.
Nice.
Jeremy, when you hear
Jeremy, first I want to say you've just earned $10 from us. We're going to send it to you. Just give us your Venmo.
Right.
Okay, you've earned $10. You came on the pod.
Yes.
You can buy a share of Palantir. We closed at $10.
I'm paying the mortgage this month, gentlemen.
Right. Here's the question. Would you take the cash or would you take the share of Palantir?
Would you take an IOU?
What would you do? What do you do?
A share of Palantir for sure.
That's
Jeremy, when you hear people say stuff like this, like, I mean, even today, some guy commented on my video, he's like, Amit, I'm up 3,000 because and I'm like, obviously I'm not the reason, but you do play somewhat of a role in terms of the media you create. How do you feel when people say like your videos help me make some fucking money?
I feel nothing, to be quite frank. And the reason being is if you feel it on that side, then if you ever make a wrong call, you got to feel it on the other side.
Good point.
So for me, I really feel nothing. If somebody says, at the end of the day, it's good if I'm providing that content and it's giving people context or information they might not have or perspectives, and it's giving them the comments I always hate is I just bought this stock because you bought this stock. That drives me crazy. I'm like, do your own dang
Our
research.
boy Chris has been struggling with this.
Dude,
Chris needs to hear what you're saying right now. Chris really needs to hear.
Chris needs this advice because he's struggling with people following his picks and he feels responsible for it.
So what happened was I had a few picks that went really well. And so some people really followed me into it. And, sometimes it works out really well and I'm happy for these people. But then also there were other people, like a few days that something went down and they were like, what do you mean you sold out of that position? You said that it was going to be great. And I was just like, look, guys, there are times where you have to be a little bit opportunistic, And so I personally felt bad. I'm like, do I really want to continue just telling people like what I think of certain companies, because I don't want to be personally responsible for someone losing, their money or their life savings. And I think that's something that over time it's going to become a numb thing. But how did you process that? Like, how did you get over that? I'm sure that you felt, because you're a good person. So
yeah, I just got over it over time. I think just experience one. Of kind of doing that and making sure you're preaching the right things over time, about looking into income statements and balance sheets and making judgments about companies and not just following to, blindly follow. But unfortunately, and also I just came to the realization, like they're always going to have a certain segment of the population that does that. I'm sure Jim Cramer says, buy this stock. People go out there and just buy the stock or sell the stock. And I'm sure people just go out there and sell the stock. And I wish the good news is most people I think are a little smarter than that and a little more intelligent and do their own research. I think one of the best, get back to what happened last year, right? And really that whole come down from the 2021 hype cycle at the beginning of the year, right? One of the best things was we either got rid of those sorts of folks or the people that were kind of newbies in the market. They realize, oh crap, I actually have to put in work. Like you can't just buy stocks because it's going up or something like that. I actually have to understand an income statement and a balance sheet and what a P ratio is and what a forward P ratio is and how to judge companies and their competitors versus each other and these sorts of things. And I'm going to listen to a conference call. So that's the good news, but you're always going to have a certain segment that just they're those sorts of people, and you know, you just have to hope those folks learn their lesson over time and ultimately learn how to do their own research and things like that, right? So it's part of the process. It's what, as I say, it's the cost of doing business. It's the cost of doing
I
business.
think you're right, Jeremy, but still Chris is a flip-flopper.
Whatever. Call me whatever you want, man.
I'm only messing around. I told you on Twitter, and I defended him when he was on Twitter. I was like, everybody leave him alone. He's allowed to have picks. He's a YouTuber, okay? And if they don't all succeed, then that's just the way it is. You're not supposed to follow YouTubers into trades. It's ridiculous.
Well,
See,
but I think the distinction is that we're not trying to be YouTubers. We're regular guys that just happen to be
We are on YouTube, sir.
No, but we're not putting on, I'm not on this. I don't think we're on this to be like a YouTube personality. These are our actual personalities. I think that's what people are resonating with.
And people make actual mistakes, you know?
That's the point. So it's like, I think what people resonate even with this podcast is that these are conversations that the four of us would probably have if we lived in the same state and we were able to get drunk every Friday, you know, or every night, you know.
I think for me, I go where the opportunities are when it comes to certain things. Like I could not have thought, like a lot of these regional banks, right? Like lately I've been researching a lot more into the regional bank. This sector got killed and decimated based on some short-term news that I know is eventually going to recover. So I'm thinking to myself, well, wait a second, where are the opportunities in the sector? Because it's not like all regional banks are going to go out of business, right? People are still going to need credit. So I'm like looking at the sector saying, hey, are there opportunities? So did I downsize some of my other positions that are a little bit more riskier that may take a longer time to play out? Yeah, of course. I use that capital to take a nice short-term position on something like this.
Chris, you said go all in regional banks. I just lost $50,000
TFC and Weight Watchers.
He just bought calls on Truist Bank.
I did actually. Me and Amit both have calls on Truist Bank.
We've got some decent amount of money.
You know what's funny about these things is that we actually will get to see how it plays out, right? So we're not going to have to wait that long. So
yeah,
I want to give the super chat thank you for the super chat, Josh Shannon, $9.99. Appreciate. There's another Palantir share, Jeremy, for you. Appreciate the content.
$2.50 extra in his pocket right now.
Jeremy's definitely one of my favorite content creators.
Jeremy, this is not financial advice, but you should look at TFC, man. It was financial.
Yo, you gave Chris all this confidence about being a YouTuber. He's like, fuck it, I'm gonna
right. He's like, holy smokers.
Okay, Jeremy, Meta goes to 88 in October. You're screaming on your YouTube channel, this is a buy.
Great call too.
Why were you so confident about Meta?
I mean, it was a pure valuation play in regards to that one. I mean, that was just got disgusting. And it was pretty obvious to me because I had been a Meta shareholder for years. So obviously I follow the company super close. And it was obvious to me they way overhired during Rona. Like that whole 2020, 2021, they added way too many employees. And so it was just, I mean, to me, that was just an obvious, like, easy money play there, in my opinion, right? And so, obviously, they've made those changes, and what we're going to see play out from Meta over this next 12 to 24 months, in my opinion, is you're going to see the EPS skyrocket, the net income, obviously, and I think we'll see, decent revenue growth. Meta is certainly not the most exciting opportunity from revenue growth side. It's certainly no Tesla, it's no Palantir. It's just an easy money, like, wide open 3 type stock, I call it. And so
I think it's $1 trillion company, if not more, and VR is a real play. Do you agree that this is an over $1 trillion company, even with the advertising?
I think they have a chance to be the biggest company in the world. I know that's an outlandish call, but I
have enough shares.
Why? What's real quick before you answer why? Thank you, George. Again, George, every day, $20. Thank you for this collaboration. 2 more Palantir shares means the world, man. TJ, the wheel deal, my guy. Appreciate all of you guys. I hope you guys all win at investing. More importantly, at the game of life. TJ, shout out to him. People in the chat don't know him. He's one of my good friends. He just got married just a couple days ago. So
congrats. Shout
out to TJ for your marriage. Thank you for the super chat. Okay, Meta, the most biggest company in the world. What is the bull case? You've got someone right above your head who thinks Meta is the most evil company for teenage girls. So please break down why you think it's the most valuable company.
Not evil, but I don't see it. So I'm curious what the answer would be.
Yeah. So in regards to Meta, I think we're going to see their net income accelerate much more quickly than their revenue. So basically, for anybody that is watching this that might not understand, basically, if they're growing revenue, let's say 10%, I believe their net income is going to grow 15, 20, 30% over this next few years based upon them bringing down costs. I believe the stock's should command, in my opinion, somewhere in the 30 to 35 current P, forward P, based upon what I believe is their long-term growth over time. Okay. And I believe that as advertising, we've gone through a really tough time this past year with the advertising market. I believe as that comes back, I believe we'll see ad rates go up substantially. WhatsApp is an opportunity Meta's just touching on. I mean, WhatsApp is massive, and they're just at the infant stage of monetizing that opportunity, which is a whole game changer in themselves. Then I look at Instagram Reels, which has started to obviously take off like a beast over this last like 6 to 9 months. They're going to play a lot of catch up on monetization. They're no different than when Instagram Stories first came out. It was like everybody started using it, but you weren't getting any ads.
Yeah.
And so there's many opportunities. Obviously, if they're successful in metaverse, that's a whole other opportunity. But that's a call option. That's to me is like the robo-taxi opportunity with Tesla.
100%.
So when I look at it from all those different perspectives, I think this is going to be a multi-trillion-dollar market cap, and I think it'll be one of the biggest companies in the world. It get more conviction if they can have that next tier platform of really being a real player. Like if it's like Apple versus them in like the metaverse opportunity, I think that could be it's just an extra call option of greatness there. So that's my opinion. We'll see what plays out there. Yeah. It's not going to be easy for them. And the problem with a call like that is there's a lot of companies that are going to be fighting for that title. I think Amazon's going to be in that running over the next few years. I think there's going to be a huge comeback there in terms of their profitability and margins. Tesla's going to be in the running once, we kind of get out of this higher interest rate environment, whenever that is. Yeah. And so you're going to have a lot of companies fighting for that title. And obviously there's going to continue to have Apple and Microsoft be there. The difference is between Apple and Microsoft, those valuations are a little rich for where those companies' growth rates are. I mean, Apple's revenues probably are going to go down for the rest of this year. So that's a whole different situation than a Meta, or certainly than an Amazon and some of the other big dogs. So, but we'll see. But yeah. You guys have any strong opinions on that one way or another?
Do we have strong opinions?
Oh God!
I think your call on Amazon is probably the one that I agree with the most. I think there's so much underappreciation for how much Amazon has honestly grown and how much money they've spent on capex, that now they can cut back on the capex, and all of that stuff ends up being cash that's generated that they can use stuff with. Probably some share buybacks, because one of the things that people don't realize with Amazon is Amazon pays their workers heavily in stock, right? So there is an automatic assumption based on their compensation that employees will get a 15% return on their stock every year. Now, the thing is, because of that underperformance of that stock, they're going to have to do something to boost the share price up. Now, what do I think it is? I think it's easy. They're just going to cut back on CapEx, not hire as many people, lower down the OpEx, and just use that money to buy up shares so that it shoots the stock back up again, so that now you don't have an employee revolt on top of it. So, and the other thing is, like, the CEO, Andy Jassy, I think a lot of people think that, oh, it's a new CEO, he's the outside guy, he doesn't know how to do things like Bezos. And I'm just like, that's Bezos' top lieutenant. They built AWS together. So you're in good hands. Like, this is the same Steve Jobs, Tim Cook moment happening again. Yeah, so I think Amazon is probably going to be the one you really want to focus on, and that's the one that I'm probably most bullish on.
Well, I'm curious, is it Amazon or Meta? If you had to pick one, of course.
I would say if I had to pick.
Chris,
he was asking the guest.
Oh, Jeremy. Okay, yeah.
Yeah, Chris, I like to hear what you have to say about this.
Yeah, Chris, I do a podcast with you every night. I still care about what's different.
So Meta for me is just a hold now. I have a really good sized position in Meta. I think it's around like 400K. So I don't need more Meta shares. I do need more Amazon shares. So, and I think those two both have incredible bright futures. To predict which one's going to outperform, it's a really tough game.
But you have more Meta. You're saying I have more Meta than Amazon.
Significantly more. Yep.
Well, that says a lot. That says a lot.
Is that a function of your conviction, or just where the prices were at the times you were buying?
Prices were in Amazon's really just been a stock I've started to really build out over this last, I would say, like 6 months. So Amazon's a position I'm building into and just plan to continue to build it this year, whereas Meta is just a hold for me now at this point in time. But I mean, if you had to say, what if I didn't have a position in Meta? I would honestly probably be building my position in Meta right now. It's just at some point in time, you get enough shares of a stock and you don't want to get too in case you're wrong, right? Because sometimes you could be wrong. I could be wrong on Meta, and who knows what happens there. But
that was the question that I was going to ask you. It's like, do you also build a bear case for stocks that you're interested in? Like, when you're too bullish or the conviction seems too strong, do you also say, hey, let me step back for a second and see what are the potential headwinds that I might not be looking at? And then how do you weigh those things against each other when you are allocating your capital?
Over the past, I would say 9 to 12 months, I've really started doing that on a higher level. So what I'll create is I'll create a super bear case, a bear case, a base case, a bull case, and then, like an ultra bull case. Yeah. And I started really doing that over this past, I would say 9 to 12 months, especially on big positions, because what I found definitely is many times I could be trapped into only looking at it from the bullish perspective, not saying, well, what's the risk here, right? And so that's something I've definitely started to do over the past few years. And so if you like Amazon, I got all 5 scenarios lined up and kind of what I expect those companies' net incomes to be and revenues to be and margins in different scenarios. Why would margins go down in this scenario versus up in this scenario and whatnot? So, and I think that's important especially for big positions people build out. It does make you think, okay, what are the risks going in with this?
Do you also consider the other players in their industry? Like an example is something that I'm bullish, that makes me more bullish on Tesla, is the inevitable collapse of the other auto companies. So as they collapse, I feel like it's a vacuum, right? People will then start looking at the only player in town, and that's nothing to do with Tesla. They're just going to operate, and the numbers are going to be the numbers. Is that something that you also do as well, say with a company like Meta or Amazon or any of the other stocks that you're heavily convicted in?
Yeah, 100%. I mean, you ought to always think about the competitors. And so even with Meta, like for Meta, I think about everything that takes people's attention away is a competitor to Meta. Netflix is a competitor to Meta. YouTube's a competitor to Meta. Like, anything
Twitter.
that's like TV, Twitter, like all this stuff is ultimately competitors. It doesn't even have to be necessarily for them, it's an attention play. They want you to spend, TikTok, obviously massive competitor. They would love you to spend more time. The more time you spend on Instagram, Facebook, or different platforms, the more money they're going to make. That's just, it's just the math behind it. So, that's kind of the way I think about it. And in terms of Meta, obviously TikTok's been a major competitor and probably will continue to be. Is it going to get banned? I mean, probably not. That's my guess on that.
You don't think it's going to get banned? We actually think.
I actually don't think it's getting banned either.
I don't think so either.
Chris think it's happening.
I think it's too easy politically. It's a great thing politically to get supporters behind you, but once they do it, they can't use it anymore as like a campaign. So
let me get to the super chat, and then we got to move on to one more topic. Palantir Research 3450, just a tiny show of support. Keep the good work all. $6.09 each, of course. Appreciate you.
Thank you for counting. Because
I want to move on to the macro. You are one of the best YouTubers in the space to analyze the macro and like actually analyze interest rates, what the Fed's doing, all that stuff. I saw you just posted a video, because you post like 5 videos a day, reacting to Tom Lee. So here's the question, not financial advice. Are we headed into a recession, or is Tom Lee right that even though the S&P is trading 18 to 20 times at a price to earnings, it still has more room to grow? What do you personally think is going to happen throughout the summer going into September?
Oh man, that's always the question. People always want me to say yes, no, and it's like, it doesn't work like that. In the markets, in the economy, you always work on odds of probabilities. Okay. And so I was taking poker serious for a while, and something you learn playing poker is like, there's chances you're going to win the hand. You could have a great hand, and there's chances you're going to lose that hand. Right. And so the way I kind of look at it from this perspective, if we continue to have inflation come down, and let's say next month is like a 4.4, 4.3, 4.2, something like that, which I think is a possibility. We're going to be looking really good. And then if we can get into the 3s, then we give wiggle room for the Fed to potentially cut rates, let's call it late summer, early fall, if we have any weakness in the economy. Let's say a payroll number comes in bad, unemployment ticks up, something like that. Because right now we've finally gotten to a stage where the Fed funds rate is above CPI. And this is the first time this has happened in like a long flipping flapjack in time. It's been a long time. And so this is a big moment for us now. So if we can get that divergence to get bigger and bigger, that gives the Fed more wiggle room to eventually cut if we have any weakness. And if they can cut before things get ugly, then we have a chance of having that soft landing, as people want to say, or a no landing situation, right? So the good news is we still got a lot of job openings. There's still tremendous amounts of just needs-based jobs. I mean, recently, I don't know if you guys saw this. I think it was a waste management CEO said he was having a trouble finding somebody to drive trash trucks for $90,000 a year. There's plumbers, electricians, like all these sorts of jobs that aren't the most glamorous jobs, are very good paying jobs that are needed out there in the market. So if you get corporate weakness, I mean, go drive a trash truck and make some good money, or go be an electrician and learn that trade, or plumbing or whatever. And so we have some of that. Housing is always matters significantly to the U.S. economy. The home builders have started to have their backlogs dry up. It is not yet at a point where you need to be really scared, but if this trend continues for another 12 months, that's a whole different ballgame. And that's where things, because building a house, in my opinion, is the best thing to ever happen to the U.S. economy. The amount of jobs that are supported when you build a home is ridiculous. Like somebody's got to, do the windows, and somebody's got to, do the floors and the counters. And there's so many,
especially a big ass home like yours that I visited in Vegas. You got some jobs there.
Somebody makes the chandelier, and somebody sold me that chandelier, and they made money off that. And the TV, and when you really add it up like that, it's like, oh my gosh, how many businesses, how many people made money off this? It's astronomical. So housing, keep an eye on housing, very important for the U.S. economy. One of the reasons we had such an awful, great financial crisis, why it took years for the unemployment rate to drop, is because housing was in such a bad place. And if you're gonna dry up home building, oh my gosh, the amount of jobs you're going to dry up and the amount of damage that happens to the economy is devastating, because all that has a huge domino effect. So we still got a lot of home building activity going on. That's good for us. But keep an eye on home builders' backlogs this next 6 months. We need to see it stabilize or build over this next 6 months. If it doesn't, then that odds of real recession, ugliness, then the medium landing, the hard landing gets much more realistic. But we'll see how it plays out. So as of my feeling right now, I would say we're looking pretty good, but we're certainly not out of the woods. Certainly not out of the woods. And this is going to be a game that just, it takes a while for us to get to the finish line. Everybody wants the finish line right now. Like they want to know for sure no recession or for sure recession. It's like, it's not the way a gigantic economy like this works. You got to let this stuff play out, and we'll see where the cards fall. But I'm telling you, pay attention to housing. That's going to be important.
I have a follow-up. So besides housing, I'm in real estate as well. But
okay,
here's the question: is now, and maybe into 2024, even if the rates take their time to come down, in your opinion, is now the time, like for the next decade, that this is the time that millionaires will be made?
In real estate?
Meaning now, is this now that it's happening the next year or two? Besides real estate, I'm not talking about, I'm just the market, the opportunities that are there right now. Is now the time until basically 2024? And then after that, do you expect, if the rates do come down eventually, they have to eventually, right?
Yeah.
That means that we might be entering another bull run for 10 years or more?
Could be. I'm maybe not quite that optimistic, because I do look at the concerns out there, and I do think about these potential pitfalls and whatnot. The consumer.
It's not stagflation. Are you thinking stagflation?
I'm a little worried about stagflation. The good news is we have still a lot of jobs. Obviously, unemployment's super low, and there's a lot of job opportunities out there still. Maybe not for working at a big tech company like a Meta or somebody like that, but as we spoke about, other fields. So, I mean, there's a lot of risk out there. So I don't want to get that. I'm not that level of bullish, but at the same time, you got to always look at it from a longer term perspective and realize and pounce on opportunities. We spoke about Meta earlier, right? A tremendous amount of opportunity that was, slapping people in the face. Palantir, which we haven't even touched on yet, has been a tremendous opportunity. And I think sometimes people in the market let these opportunities pass because of macroeconomic related fears. And it's just like, if you see an opportunity, take advantage of that opportunity. As long as you have more income than expenses, if the stock drops, if you buy Palantir at 7 and it goes to 6, who cares? You can buy some more shares if you still like the company just as much, as long as you have more income than expenses. And people want to try to get the bottom, and it's like, that's not the game. That's not what's going to happen, man. You're never going to get the bottom on these stocks.
Speaking of Palantir, it's time to transition that. Let me do these super chats, guys. Thank you so much for this.
You said an important thing. You're never going to catch the bottom. This is absolutely
never going to catch the bottom. Correct.
Yeah. Unless you're Chris. Chris catches the bottom.
Unless you're Chris. Yes.
Or Drake, because he started from the bottom apparently.
That was a good one.
And now he's here.
I remember the first time I mentioned Jeremy, you reacted to one of my videos, and I said Drake is an American hip hop rapper, and I'm such a big Drake fan, and you called me out on that, and I'm like, fuck. The one time he reacts to my video, I say the wrong nationality.
From Canada, yeah.
Of my favorite guy, like this is my guy. This is all I listen to. And like, I messed up. Kanam, thank you guys. Love the content. Jeremy helped me to be a better investor, and then Noah. Jeremy is the epitome of consistency, and his success is due to that. I think you're on the same path, mate. Appreciate the content. Keep it up. Thank you, Noah, for the $20 super chat. All right, Palantir. Start off with an easy one for you, or maybe a hard one, maybe a perplexing one. Cathie Wood bought 4.3 million shares before you got on the stream. Why do you think Cathie?
What did you say to her? Yeah, what did you say to her?
What did you say to her to convince her?
Make her buy the shares.
So okay. First off, it never made sense to me why she would sell Palantir, because at the end of the day, she's supposed to be all about innovation, right? In the more you dig into the Palantir story, and she's supposed to have this amazing team of these researchers and whatnot, right? The more you dig into Palantir, the more you go down that rabbit hole and you realize, oh my gosh, their product's amazing. Like, you listen to people in the industry and you're like, dude, this is huge. And so for her to sell out of that stock never made sense. And you could say, well, it was losing money. And so that's why she sold. She's the the queen of buying companies that lose money. So I was just like, when she sold that, I was just baffled. I was like, why would you do that? It's a growth company that has an amazing product, a crazy opportunity at the cross sections of data and artificial intelligence. And it's just such a perfect Cathie Wood stock. For her to sell was just kind of like baffling. Now, let me say this, because I know there's probably a lot of different opinions. I think it's better we have her on our team for the Palantir Bulls than not have her on our team.
Why?
So she's still a subject of conversation. She brings a lot of attention. And so from the stock price perspective, that's one way of looking at it, right? She's going to bring a lot more attention to the stock price. She goes on CNBC and Bloomberg, and people love to talk about Palantir. So I'm sure, especially if she builds this out into a position where she's got tens of millions of shares, which is a possibility.
Which is she going to do? She's probably going to do.
Yeah. There's going to be a lot of people talking about it, and they're going to want to talk to her, and they're going to have her on CNBC and Bloomberg. And, hey, saw you bought Palantir. What's your thoughts around this? Alex Karp, blah, 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 like they used to do with Elon Musk, right? It's not to that Tesla level, but it's going to be talked about. And at the end of the day, those finance channels, CNBC and Bloomberg, all that stuff, right, that she'll go on and talk, a lot of executives watch those channels, a lot of high net worth individuals that will then look into Palantir maybe a little deeper. And if there's one issue we've had with Palantir, it's sales and marketing, getting the name out there more. What is this Palantir company? What do they do? How can they help my business? Just having her be a subject of conversation that pops up everywhere, I think it's a good thing rather than a bad thing. So I'm happy to have her as a shareholder again. And I hope they ask her about it, and I hope she talks a lot about it and brings more attention to what Palantir's product is, why it's so great. And I hope she'll be able to convey that in messaging that's pretty short, because as you guys know, when, for CNBC, Bloomberg, those channels, when they ask about a stock, like they don't want you to talk about it for 30 minutes. They want you to talk about it for 30 seconds. And so she's going to have to somehow convey why Palantir's value proposition is amazing in that 30 seconds. And then hopefully executives will take notice and say, let me look into this company. What are they up to here? So anyways, yeah, definitely I'd rather have her be a friend than a foe. I guess you can say that.
I have a theory about.
I think the question is, what do you think about Karp's poetry?
Okay, that's not the question. That was not the question.
AKA his shareholder letters.
Did you read them?
I do. Karp's, I've always had an opinion of him.
You've never been a real fan of Karp. I know from your previous videos, you never really loved him like me and like other people, right?
Yeah.
This guy doesn't talk about numbers, stuff like that.
Yeah. I mean, I don't think he's the best person to talk about the stock.
Okay, the CEO.
Correct.
Yeah, he's certainly phenomenal with his philosophy and his opinions and the way the world works and all these sorts of things. And I think he does capture a lot of people's attention in mindsets, and I think that is a beautiful thing. Yeah, and I think that's good. But at the same time, sometimes I want to hear about what's the company up to, and not these big subject things about Russia and Ukraine and all this
freedom
these sorts of different subjects. So go ahead.
Let me do two quick super chats. Michael Lau bought Tesla February 2016 at $164, $11 today. Few were talking about it. I would search and sort by new daily. Found one channel and sub to financial education to support the little guy. Thank you, Michael Lau, for that. That's awesome. Yeah, that's your impact, Jeremy. And Ryan, Jeremy. I've been following you guys. I have a nice Palantir shirt and Meta shirt I want to give you as a gift. Please accept my gift. Thank you for that, Ryan. Now, the quarter just came. Palantir achieved GAAP profitability. The stock is up 30% in 2 days. They're going to be GAAP profitable for the rest of the year. Revenue beat 525 million versus 506 million. What are your raw thoughts on the earnings we just saw, and why do you think there is some momentum behind the stock in the past couple of days?
Wait, before we get into that, Carlos, I got to know, you had some conspiracy theory you said you were getting into or something. What was that all about in regards to Cathie Wood and Palantir?
Oh no, with Cathie Wood, I was going to say I have a theory about Cathie Wood, that she was able to relatively fly under the radar, and a lot of her success was a lot of her picks. She was really successful because she was able to fly under the radar. But once she became like the most successful investor and ARK had all of this attention, I almost felt like there was a financial attack on her fund. And so now she needs to have these inflows come in. So this was back to why did she sell Palantir? Well, because she needs to have inflows come into her fund. But if people are selling out of stocks that she's saying are long-term plays, she cannot expect the people that want returns on the short term to stick with her. And so I think this is a problem that she has, having a 5-year time horizon with the market looking only in front of its face 3 months. And so that was my question for you, is do you think that now that she has come out, right, and she's in the mainstream, do you think that this is something that she's going to navigate? And if so, how?
Yeah, I think she's going to do better this go around over this next few years, certainly than the last few years. I think, I mean, the problem was it was such a hype cycle. Obviously, Cathie Wood was kind of, one of the faces of that hype cycle and excitement cycle. A lot of money poured into ARK. She had to invest that money at really bad valuations for a lot of stocks, as we know. Growth rate slowed, that whole situation. So I think she's going to be in a better position this go round, and I think she'll likely invest smarter. And I also don't think she'll be put in nearly as bad a position, because I don't think she'll have quite the inflow she had before. And I don't think she's going to have to pay the sort of valuations, obviously, that we had to pay, at the end of 2020 and into 2021. So, but that goes into a bigger subject about the fund managers that are hot. They have trouble because eventually they get so popular and they have so much money inflow. And, that's just something that's been going on for the longest time. But so in regards to Palantir earnings, I know you asked me about that a minute. Okay. So, I mean, I was really impressed, really, really impressed. The revenue growth I was even better than I thought. I was very confident that they were going to beat on revenue, but I wasn't expecting that big of a beat. That was really impressive. So to see a company like that beat in this environment, it's a very tough environment for revenue growth. I mean, when you have Apple struggling to even grow revenues, you're in a very tough environment for growing revenue. So I was really impressed. And then obviously they're making a lot of income off of investing cash in treasuries, which is, just a kind of a beautiful thing right now. Carp's really keeping expenses in line, which I love, except for sales and marketing, which I give the okay on, because obviously we know that the main issue with Palantir has really been getting the product out there more, getting it seen, getting executives to understand it and want to sign up for it. So it seems like he's definitely aggressively spending there. So I was impressed. I was really happy with the earnings. They have a long way to go with their profitability story, in my opinion, a long way to go. But this was the quarter for the year I was most worried about, the first quarter. I'm much more confident even next quarter, and certainly much more confident in 3Q, 4Q. This was the one I was a little, boy, are they going to be, especially after the last conference call, Carp mentioning, on the last conference call, he was mentioning, he never said we're going to be profitable on a quarterly basis here on out. He said on a yearly basis. So I'm like, crap, man, is he expecting a loss? Then as once we heard the S&P 500 inclusion details come out, and then I saw him on a few interviews, I was like, oh, okay, like they're going to be profitable. They're good now. And so that became a little
Jeremy,
more.
You were in Tesla when the S&P 500 inclusion happened. Can you describe a little bit about what that was like when that happened? And do you think the same, obviously not the same stock price and stuff, do you think there'll be a similar thing of hedge fund managers saying, oh, we got to grab some Palantir before it gets there if they're profitable for the rest of the year?
100%. Yeah, 100%. I mean, it's a kind of an easy arbitrage for a lot of fund managers. And so they're going to look at it and they're going to say, the more Palantir gets closer to that S&P 500 inclusion, the more you're going to see money continue to inflow more and more, because then it's an easy arbitrage. You understand, once this company gets in, there's going to be a massive amount of money that has to come into Palantir. And so naturally, you get these inflows and just continued inflows into the stock as you get closer. And so if Palantir puts up another profitable quarter, that's going to be the next level for Palantir in terms of inflow and money, right? And so, yeah, I don't think the money coming into Palantir stock for the next 12 to 24 months is going to slow. I think it's just going to be it's one of the few times you see a perfect setup from a long-term and a short-term perspective. The long-term stories there that we're all excited about, us all, longs. And then you got the short-term crowd that's more focused on the next 12 months looking at this and like, ooh, S&P 500 inclusion could be coming, maybe the beginning of 2024, end of this year, maybe beginning of 2024, something like that. And so, so it's a beautiful setup. I got to say, it's probably the most attractive setup from a short and long-term perspective in the market right now, in my opinion, at least that I know of. So
I think I want to point out that Tesla, well, it ran up. Me and Carlos were watching it. We're investors for a long time, but I think it's lower than the S&P inclusion price right now.
We have to do it.
So
you'd have to divide it by 15.
November 2020. I don't think so.
No,
Divide by-
yeah, it was around 500 or so, and then ran up higher.
Mhm.
And we are under that price because there's a 3x split that we have to account for. So I think we're at 450-ish. So
Oh, right. It was
I'm
only
just saying that anyone who thinks the S&P is the solution to all your worries, it might not be, because I think we're
but
under
that's
that price right now.
after almost a year and a
So
half.
right, so you
Thing.
better sell if you expect to sell at some point, because that puppy may be going right back down.
Can I ask you a question that's maybe for like the person watching this 6 months from now when a lot of the short-term stuff goes away? Like, it's clear that everybody in the chat, and even us included, have looked up to you and have been watching you for a long time. Who are those people for you? Who do you watch? Who do you get on YouTube and see if homie's got a new video? Like,
and obviously, as a content creator, you are really busy, and a lot of times you don't have time to consume people. But like, I guess, who are some of your inspirations?
Yeah,
in the
so it depends on what I'm looking for at a particular time, right? If it's Palantir, I want to check out what Amit's talking about in regards to Palantir, right? I think he's a thought leader in the space, and I look at, there was a fellow that was on kind of the Tesla train with me back in the day, and his name was Galileo Russell. He had a channel called Hyperchange, and I used to watch a lot of his content. And this is back then; it was like pretty much only him and me that were kind of like bigger YouTubers making Tesla content. And so he was somebody that was like nice to have an ally out there, and somebody that could, was really into the stock. That was nice. And so I look at Amit kind of like that in the Palantir wave of just like somebody that's always on top of everything, every little detail he's going to cover, and that's cool. Now, obviously on my younger years, Warren Buffett, like he was the first person, like, oh my gosh, I would search everything on YouTube, Warren Buffett interview, Warren Buffett, speech, like watch these different things back from the 90s and the 80s and whatever, and even more recent stuff that was done in like 2006, 7, 8, 9 back then. And so that was definitely somebody that helped me. And that's how I really got started with value investing, because I was not a growth investor at first. I didn't even start looking at growth stocks till I was in the market for many years. I was strictly the guy that was like, is it over a 20p? Not buying it. I don't care. I don't care about its growth. If it's over a 20p, I'm not buying it.
You were that type of guy? Wow.
I was 100%. Because growth investing is difficult. It's the hardest thing in the market. It really is, other than short selling. It's the hardest. That's a whole other game. Growth investing is hard because you've got to be able to predict where companies' revenues, margins, net income's likely going years out. That's not an easy thing. Analysts that are supposed to be professionals at this have trouble. And you've got to be able to look at the valuation and say, based upon where I think this company's going, I'm getting a very undervalued stock, or this is an overvalued stock, I need to stay away. It's very difficult. And it's not as simple as just like, this stock's growing, I like it a lot, I'm going to buy it. It's a little more to that game. Otherwise, you're going to get caught up into some really bad pricing on stocks. So I lost my train of thought. I was
Warren Buffett. That's one of the guys you look.
Well, it's just who are you watching? Who's your Jeremy?
Yeah. So I honestly say Buffett, because back then there was no such thing as like YouTubers and stuff like that. So like Buffett was that guy for me, where I was just like ate up everything.
Has to be a YouTuber. Sorry, has to be a YouTuber.
Yeah. I know, man. I was like, I wish, I came up in this day and age where, you have a bunch of different YouTube channels, and Twitter, like Twitter's really good for that. But and today, there's a guy I love to watch. His name's Maverick of Wall Street. He's a bear, and he's more of a perma bear. But I love him to balance me out, because it's kind of like, it's like caffeine, and then the come down to caffeine. So he's always bearish and always has a lot of bearish points. So I like to listen to that. It just keeps me grounded and keeps me on my toes as far as like the bearish side and looking at things from glass half empty rather than half full, because I'm more optimistic. So
all right, Chris, I'm gonna let you go in 2 seconds. Let me get these 4 super chats out of the way. 1999, thanks for the Palantir streams. Great conversations. 5,000 shares, DC at 837. Amazing average. So thank you for that one. Scott, as a $1, thank you. You guys are great. You had a bunch of value. Palantir's been a conviction of mine, but it has to keep me convinced. $100 one day. Hopefully, Scott, thank you so much. Benjamin Murphy, $20. Thank you for all the value you're providing. I listen to each of you, and I'm inspired to find some friends that like to talk finance and investments. Awesome collab tonight. Jeremy, I just joined your Discord a week ago. Awesome, Benjamin. Thank you for doing that. And again, it's just guys on the internet talking finance, which kind of becomes a family for a lot of people, which is super, super fun. The super chat we have,
ladies, thank you very much.
And ladies, the 5 ladies.
Equal opportunity. Women can lose money too.
Rumor is there's more ladies on the chat tonight. I don't know why that is, but there's the rumor.
I don't know why that is. I don't know why.
Tickle my pickle.
Abraham, $10
your shot tonight,
Palantir holder.
guys.
Does the comment from the Jefferies analyst about the SPAC pull forward in revenue not concern you at all? So this is a deeper question. So I will answer that in the comments, Abraham. I'll literally write my answer in the comments because we got limited time. So we got to go from there. Chris, go ahead on your question, and then we'll get to this SoFi take from you, Jeremy. Go ahead, Chris.
So I'm sure that if you follow Buffett, you're definitely going to be following Howard Marks. I think Howard Marks like breaks down the economic cycle really well into like when things gets a little hot, when things are because one of the things is he is like me. I look at the credit markets a lot more than the stock markets, because I think the credit markets kind of like are a little bit of a crystal ball on where things are going to go. So right now you're starting to see where the bond, like right now you look at bond yields, right? After this whole thing that happened with CPI, you're starting to see bond yields start to come down because a lot more people are like, okay, yeah, we're definitely going to have some cuts. So I think if you're trying to do some crystal ball like math and like, okay, where is the economy headed? And then how do I adjust my portfolio to like match that? I always find that the bond guys know a little bit more. So like guys like Howard Marks are like amazing, especially like Howard Marks's memos. Like if anyone doesn't know Howard Marks, please, by all means. And I'm sure, Jeremy, have you ever read anything by Howard Marks, like in the memos or in the books?
I've certainly heard about him and seen a few things, but not like a Buffett type situation. But.
Yeah. Yeah. So for me, it's Howard Marks. I would say if you have the time, you would really like it. Check it out and you'll be impressed. You'll be impressed.
Okay. Quick take, Jeremy. I know we got like maybe 5 or 6 minutes left with you. So quick take on SoFi.
Okay, yeah. By the way, Peter Lynch too. I love Peter Lynch. I got to make sure I give him a shout out.
Balls, yeah.
Yeah, he has some great old clips of him from like the 80s and 90s.
Your angry grandfather just like yells at you, right?
Yeah, he honestly might be better than Buffett at actually talking to retail investors and like giving practical tips. He's an amazing guy. So SoFi, I've been kind of impressed with SoFi in terms of what they've been building. But I haven't been able to clearly see the light at the end of the tunnel in terms of, am I getting the stock for a very undervalued valuation, or is this just a glorified bank? And that's where, that's tied up into like, oh, we're tech, but we're just a big bank. So that's why I haven't been able to buy that one. Palantir, I can see the light at the end of the tunnel. I can see how they get to major profitability. Tesla, obviously, I was able to see that. I can't see it with SoFi, and it doesn't mean it's not there. It's just, you're not going to be able to see everything. So maybe I'm missing it with SoFi. If any of you guys want to pitch me SoFi, you can keep.
No, don't worry. We're not we're not on this pod.
You should watch SoFi Weekly. They break it down.
It's junk.
We spend some time trying to figure out how to justify it.
I own some, by the way, so I can say that as a share.
One last super chat, then we're doing the giveaway that's going to include you, Jeremy. Great pod, guys. Thank you, Dat Nguyen, for $5.
That's Nguyen. One of my best buddies, Duke Nguyen.
Oh, you don't say the G. It's new. I think it's Nguyen. You don't say the G. That's how the Vietnamese say it, right?
I'll ask my buddy. I've known him since elementary school.
Jeremy, would you buy Tesla at 160 or Amazon at 110 right now if you had to pick?
Ooh, that's tough. Boy, if I didn't already have a big position in Tesla, I might be inclined to actually buy Tesla over Amazon. But with that being said, I'm buying Amazon because I already have my position, and obviously, a pretty substantial position in Tesla already. So, yeah.
Okay.
I just looked up on TradingView because some people were talking about the split in the Tesla stock price. December 21st, it was the inclusion in 2020 into the S&P, the actual inclusion. The current price is 20% underneath that price.
Wow.
The actual inclusion day, not the announcement. So I got to check the announcement too. But the inclusion day, we're lower than that day.
Right. So people thinking it's overvalued now, right? And it's
exactly. So my point is, even great stocks fall sometimes.
Okay. So everyone corrected us. It's actually win. That's how you're supposed to say it. It's a win.
It is. Yeah, it is. I think my wife corrected me about that yesterday. Yeah.
All right.
Producer wife.
Thank you, producer wife. All right, so here we go.
Jeremy, do you have a producer? Do you have a producer wife, Jeremy, that helps you out?
He's like, I have a wife.
Yeah, like I make my videos and she stays away from it. She's not involved in all this finance stuff.
I have a boss. I have a boss.
I have a boss. I love it.
The CEO.
All right. Here we go. So there's 767 people here. First of all, thank you so much for joining. Jeremy, you definitely know how to bring out a damn crowd. So thank you, Jeremy, for being on. Thank you for being here. This is the Finance Junkies podcast. We do this 5 times a week, Monday through Thursday, 10 p.m. Eastern. And then Sundays at 9 p.m. So if you guys want to come back tomorrow, check out how us four knuckleheads look like without Jeremy, then please make sure you step back.
Jeremy's coming back every week. That's all I'm
Jeremy's coming back
saying.
every week. Yeah, Jeremy's just, it's so simple.
He's the fifth member. That's it, man.
Now, what we do on this podcast, because we've hit in 300 people in a row for 6 days straight and 7 and 400 yesterday, is
Get ready,
we do
Jeremy.
something called Ring the Cowbell. Okay.
We don't, by the way. You're the only one with the bell.
Now, I do a morning stream every day. I open the market at 9:30 a.m. every day. I ring the cowbell in front of 300 people as well. So what we are doing today, let me share my screen. Jeremy, get your phone out. And by the way, while we're doing this, everyone put in the chat where you're from, where in the world you're from, because we're doing a giveaway. And this giveaway will allow anyone in the world, no matter what the shipping fees are, to get what this is. So please put where you are around the world watching tonight, 700 people. I have a second cowbell. Okay, I have a second cowbell. And I'm giving this cowbell away. Now, how am I going to give this cowbell away? It's not going to be the easiest, but here's our go at it. Jeremy, I need you to text me right now and think hard about this. Don't do it immediately. Think about it. 3 out of these 10 ticker symbols to my phone. The first person in the chat that correctly names the 3 ticker symbols Jeremy has picked is going to win this cowbell. So Jeremy, think about it for a second and then text it to me.
What's the
Did you do the
criteria?
math on this, Amit? Did you
Yeah,
really
it's
do
going to
the
be really
math?
hard. So but we have 700 people. We should get the combination.
But what is the criteria? 3 stocks that Jeremy wants to buy? Or that
If you get the exact 3 tickers, you win the cowbell. You have to be the first person I have to see in the chat. That's why I'm saying it's not perfect, because I have to catch you. But you can have as many tries as you want. So you can type literally a billion times into the chat.
And it's only going to take 3 hours for us to finish.
someone's figuring out what is that? Like 10 factorial right now.
Okay, I have Jeremy's picks. They're here. I have Jeremy's picks. Let's see who. Oh, I think we got a winner. We got a winner.
Wow.
Yeah, guys, we got a winner. It didn't even take that long. We got a winner. I already got it.
Bay
We got a
Ray,
winner.
Bay Ray, right?
We got the winner. No, I'm not highlighting yet, but my hand is hovering over the comment. Wow, that was so. You guys really thought it would take 3 hours?
Okay, who's the winner, dude?
Well, Jeremy's got to go, so let's ring the bell. And
Okay, so the winner, and this guy's actually on my channel a decent amount of the time, is Matt R. Tesla, Fubo, and Palantir.
Nice.
There's the text message from Jeremy. We got Tesla, Fubo, and Palantir.
there you go.
That was quick.
All right.
Wow, that actually worked out perfectly. That actually worked. I thought there would be more anticipation for that. That was great. So Matt, DM me on Twitter, Adam It Is Investing, for your address. You have just won a cowbell.
And then I want to see you burn it live.
Oh yeah, the video of that cowbell's gonna get.
So, honestly, that's a good one though, because I mean, like, yes, Palantir, yes, Tesla, and then if you've been keeping up with Jeremy, which is why Matt probably got this, Fubo.
Yeah,
I didn't know you were buying Fubo.
I have to do more research about Fubo now.
yeah. I've been in that one for a while. It's getting loud in here, gentlemen. I gotta go.
Perfect.
All right.
Perfect. Got it.
home.
Thank you so
man.
much, Jeremy. We are going to stay on, by the way, when you leave, so you can leave. But thank you for joining us. It means a lot.
Thanks so much.
Appreciate it.
Okay.
Well,
How you
it's
think I
lonely
went?
now with just the 4 of you.
Right.
How
Now there's
was
like,
that?
You mean the 3 of you? Yeah.
I think honestly, you invite him to come back as every Thursday or something. It's the Jeremy hour. You know what I mean? He's a fun guy to talk to.
People that
Yeah.
they're about to drop off, but 750 people is insane. That's like,
You know, one thing.
750, right? 756.
yeah, I was
Guys,
gonna
we made
say,
it almost 800.
Ricky
today.
D made a point. Like I hope you covered his number
Yo,
So-
no, I did. Yeah, his number.
in the phone number. Yeah.
Did you guys notice something like about Jeremy? I think a lot of times, and this is where I made a mistake in the past, where when you see a finance YouTuber, some of them are just literally just shilling companies. They're just saying, they're just repeating talking points that they heard someone else make. But this guy does his own due diligence. He really does know like market fundamentals, right? And carries it forward when he actually talks about stocks. Like he actually knows what he's talking about. It's not just, I think this company's going to the moon because X, Y, and Z. And it's like, okay, you know, like, but then you ask them any serious question and they don't have a response for it. They don't have a general sense of like how the macro is going to impact this company, right? So like a lot of the same talking points that he was bringing up are the same talking points that are coming in my head too. Like the whole thing with like credit, right? It's like the availability of credit means that the companies are going to be affected by it. So even though a company could be performing really well, if you take away the punch bowl of easy credit, you're going to see you're going to see the company not do so well for the couple of years. But then that also means, and this is the same thing that you should apply, like common sense, when the credit market comes back and there's a little bit more easier credit, companies like Tesla are going to start going up again, because people are going to have more chances to buy cars. It's the same thing with the Enphase thing that we were talking about. Enphase will definitely get cut right now because not a lot of people are going to be wanting to switch to solar and pay super high rates on their loans. But then the minute you take away those higher interest rates, people are going to say, hey, solar might be the thing for me. So I think when you're investing, it's also a good thing to look at like the macroeconomic condition, because that will help dictate where the company is going as well. So just a
I thought he was. I thought also, like, I first started watching him and it was all Tesla. But he really surprised me when he came out of left field with some of these plays, like Western Digital, right? He started talking about that, or he started talking about Walgreens, and I was like, oh shit, like he's really looking for, he's on the hunt, you know, and he's got a thesis, or he doesn't care about the industry, he cares about the opportunity. That was a big distinction that I noticed about him, and I really started taking him more seriously. I like before we were talking before we went live, I still missed the song. That song was like the soundtrack to 2020 was that song, you know, that it would come on and he'd be like, hey everybody, I missed that, man.
Bro, it's like a cartoon song, bro. Grown adults listening to
it. But for me, it really is.
Says like, the guy ringing a fucking cowbell every day.
It really is. That for me was like the soundtrack of 2020. You hear that video, be like, hey, my wife would be like, el mismo tipo otra vez. Like, she'd say that same guy. Like, yeah, man, he's gonna make us rich.
I just want to point out, some people are pointing out like his losses too. Dude, the guy's a millionaire. Okay, he has more wins obviously now than he has losses. So forget about the losses. They're gonna happen to all of us. All right.
Yeah. Trust me, that house, bro. I've been in that house. It is fucking. Not only is it big, the neighborhood, the view, that view you guys see outside of those mountains. It's like he lives behind, legitimately like a valley, and you're just looking at it. Like, I would wake up every morning like, damn, this is my life. Like, I really made it. You know.
Yeah, and trust me, I've gone down significantly in certain companies, but that's the thing. Like when you're investing, you know, and this is the same thing with, like you said, with Peter Lynch, right? You don't need to get every single one of your bets right. You just need to get a few, and those few will way outperform any of your losses, you know. So that's the way to invest. You have some companies that are definitely like hey, these are the ones that are definitely going to make it, but then you also need your Palantirs of the world that are like your moonshots, because hey, you know what, if this thing really takes off, it could 20x, you know.
I had an actress here today. Maybe later on I'll tell you who it was. I had an actress here today who was recording a voiceover with this very mic for a piece that we're doing, and she was upset because she kept getting the lines wrong. She just was like, oh my God, you guys must be so whatever. And like, we looked at her and we're like, do you realize that if you hit 3 out of every 10 baseballs thrown at you, you're in the Hall of Fame? Like,
yeah.
You only need to get, batting 300 lifetime, you're in the Hall of Fame. So it's the same thing with investing. You can be wrong 7 out of 10 times, but if you nail those 3, you know, whatever they are, generational opportunities, and you went big with a good position at the right time, what is it? The bank doesn't care. The bank doesn't care, and your future doesn't care. So,
King Gerald, thank you for the super chat. I'll take a look at this ticker. They want to look at that. I'll make a note of it. We'll take a look at it. Gotcha. Go ahead.
And I think over time, the more you're in the market, the more you realize, you know, you get, it's just like any sport, you get better at picking things as well, right? So the same companies that I would have probably picked in my 20s are not the ones that I would pick today. Like, I actually know, like, okay, what are some of the fundamental things about this company that make it what it is? Whereas when I was 20, I was, like I said, this is the key thing I like about our podcast, because you have Amit, who's like the kid. He's still learning, like, okay, what is going on? How do you effectively value a company? We've all seen our fair share of losses. So if Amit says, hey, I think we should go all in on DNA, I'll be the first one to be like, no, you idiot, don't fucking do that. Or GameStop.
But there's also, I think there's also a level of scar tissue that comes from going through, like, the 2001 and 2008. Man, that was rough, man.
Amit, you got it.
Let's talk about something important. We almost hit 800 today.
Yeah, we did. But that's because of Jeremy. So now the goal is the residual people who discovered us because of Jeremy hopefully come back maybe once or twice.
Well, you know, the way to do that is to quit while you're ahead and not have the podcast go much longer and just say thank you.
No. We're going to end it soon. We're going to end it right now.
Yeah.
No, we're ending it permanently. That's it. This is the top.
Done. Yeah.
Once you're at the top of the mountain,
Right.
You guys joke about it so much, but you fucking love the attention. You attendant whores love it so much. Just like
God. I don't know about that.
I
But
do
go ahead.
actually. I do. And at our age, we've said this before. At our age, it's very hard to make and maintain new friends. And I do actually feel like you guys are friends, which is really weird. Like I've said this before, that when I spoke to you on the phone for the first time, like literally heard your voice on the phone, it was very weird to not see your face. That is a unique thing for me as a guy in his 40s. So it says something.
Yeah.
And
All
how
right,
often do
so-
I get to talk to at least 2 out of 400 girls in the chat?
I'm gonna address something really quickly because everyone keeps asking every time we do the pod. I am gonna have to talk about Accelera at some point, ABCL, because that is a once in a generational opportunity, but it's a super speculative play that really requires some deep understanding why it's going to be where it is in the future. So it's not that I don't want to cover it on this pod, but I think if I started covering this on the pod, it would take the better part of an hour just to go through everything. And yeah, let's if people want, maybe one day we can actually do a dedicated stream to it.
Can I
But I
make
think this could be
Can I make a recommendation? Seed it on Twitter. This way people can come in with some knowledge and we don't have to use the time on the podcast to do all of the background education.
Show some
Or even
DD,
better
man.
than
It's
that,
okay to
Chris-
show due
Chris,
diligence
you might have
on
forgot.
companies.
You did a podcast about ABCL. I found it on Friday
Mhm.
already.
Yeah.
You
Whatever-
want me to
whatever
give
it
the
is,
link to
the-
people, they
you
can
know,
just watch that too.
Yeah, the point is either do
Yeah.
it on your channel or on Twitter where there can be some engagement, and then we can come in and everyone's sort of prepared.
No, we
right?
need to do that, Chris. You need to do it on
Yeah.
your channel and rebirth the Chris Patel channel. Even
But
if
you
it's
have
just
To be
clips-
honest, no, you
literally
gotta
you
do
can
it.
take clips from Finance Junkies, and that'll be your content. But like, that,
You know what
do
it
it-
is? I tried my hardest to just stare into the camera and try to like do a presentation and stuff, and it doesn't feel right. And the thing is, I don't want to get into the point where I'm trying to do something that I don't like, and then it ends up being that it becomes like this taste in my mouth that I don't want.
That's why
So I
Twitter's-
think this
Twitter's
is
the- Twitter's the deal. Like a little
No,
bit.
no. It's why this
different.
works. It's because it's
Yeah.
fun to talk to 3 other people
Yeah.
with different personalities. It's actually interesting to hear different things and not the same thing over and over.
Yeah.
That's
And I
why this
also
works.
want people to challenge. When I say something about this company, I want people on the other side to say, okay, why do you think this is? Like, okay, where are you getting your projections from? Like, what are some of the stuff in the past that you got right that leads you to believe that this is probably going to be right also? So I think that active form of engagement is what I thrive on. And if I didn't have that and I'm trying to like go on just a script, I do a terrible job at it, and yeah, like I said, it wouldn't work for me. Yeah.
All right, guys.
Okay. Tomorrow we'll obviously dive deeper into this Palantir stuff, Robinhood earnings, Disney earnings, lots of stuff we didn't get to talk about because we had Jeremy on tonight. Thank you for the people who joined. Thank you for the super chats. Everyone's links are in the description. If all 600 of you, if you're not following all of us on Twitter, it takes 2 seconds. Follow on
It's
Twitter.
a party. Twitter's a party, man.
Twitter's a fun party every day. And obviously Freelance Finance has a YouTube. That's Italian Carlos.
Freelancer Finance.
Freelance. We should just
Yeah,
call him
and-
Italian
and-
Carlos at this point.
Yeah, we should. I wouldn't mind
my
changing
Twitter
that.
in the description too, because we have freelancer finance is our thing,
Yes.
Yeah.
and then we each have our own as well.
Yeah.
We should
You
do
got
a
to follow
Spaces.
3 different accounts
Yeah.
for us, plus
You
our
gotta, I
mothers
know we're asking
and
a
our,
lot.
and our producer
Yeah,
wives.
Carlos, we might have to either you change Freelance Finance to your name, or because like it doesn't make sense to kind of have a brand account than 2 individuals.
Well, it does.
I'm-
Because we're
I'm my
separate
own-
people. We're
I'm
our
my own
own
person.
people too. We're not just
Yeah.
one unit. We're
Yeah,
also
but what's
our
the
own
point of the
people.
Freelance Finance account? Because it's just you both.
Okay.
You know what I mean?
Right now we're doing mostly this. So
I
and
say
then-
you do a rock, paper, scissors shoot. Whoever wins gets the Freelance Finance account, gets to turn it into Carlos or Vitali. Like that's the easiest way to do this.
I'm
I
good.
forgot
I've already
about that.
I've created mine, and I think
Yeah, we should do a Spaces. That's the other thing that some people have been asking as well, so that this way they
Thank
can
you,
interact
Ryan.
with us. Yeah.
I-
Thank
I
you.
like-
By the way, thank you to
Ryan,
everyone
come
who
on,
gave
man.
us super
That's
chat today.
cool of you, man. Thank you, Ryan. I appreciate that.
Thank you to everyone who
Fight to the
gave us
death.
some
I
super
prefer
chats
that
today,
one.
man. Yeah. Just like we didn't get to say thank you. I think Ahmed did, but thank you guys to all the super chats. Like it's really cool to see that, because it's a validation that you guys appreciate the stuff that we're saying, and you know what, it feels nice to see those numbers pop up too. So
Yeah, they're not going to get any of it. It's all going to me. But like, it's really cool for them to see the numbers. So.
Well,
cool.
you know,
See
we
this?
gave
See
you
this?
shit because you ended that one podcast and you were like, oh, I've spoken to 3 people and 300 and 300's better. But there is a different energy when you know there's that many people. Like the chat is just flying and stuff, and we don't hear you guys. But
by the way, to give some more context, I have offered many times to Venmo, Cash App these guys half of the super, but they're so rich because they're 45 and I'm 25. They don't really care. Like I will still do it if you give.
I think today we
Cash
care.
App, I will do it.
I think.
I told you, just take the money and buy some fucking what do you call it? Truist Bank, bro. That's what you need to do.
Oh my God.
We're trying to retire. Okay.
Look,
by the
let's
time
just-
we're
So me and Chris have
Bank.
such a good play on Truist if it hits.
No. You know what you should do? Let's take all the money we make on the pod,
and put it in one
put it on black. Just
Put it on black. Let's go.
Go to the
Roulette
casino,
table.
put it on black.
You know,
and let's-
when I
Yeah,
went
we go to Vegas and visit Jeremy, and then put it all on black.
and if
put
we
it on
double
black
it,
in
we put it
Vegas,
on
and I
Bitcoin.
doubled
The
my
rest of
money.
it.
I put it on black in Vegas. Now, how much did I put? $100, but still, it was amazing to double $100. Like it felt like I was on.
I should tell you some of my Vegas stories. They are ridiculous, bro. Like just wiling out. Vegas is.
Same here,
I
man.
love Vegas almost too much. I haven't been back in a while, but like, yeah,
I actually hated
Dude,
it.
it's dangerous out there.
I have drunken photos of me passing out in the bathroom at the Golden Nugget. Dude, that's where I was gonna go hang out. Like that's what we had my bachelor party. I didn't make it past the door. Fucking I was so drunk. Yeah.
No, like
If you're a
at
lightweight,
the wife is not
Caesar's,
around.
bro. First name basis with the pitbulls.
Black is a great stop. All right,
They
let's move
know me.
till tomorrow.
Yep.
All right, everybody. We'll be back tomorrow, 10 p.m. Eastern. Thank you
Later.
for joining. Like and subscribe. We will see you tomorrow on the Finance Junkies. Good night, everybody.
Bye.
Thank you.